Hello everyone, welcome back to Fundrise Finance. After a wobbly start to the new year, the market seemed to have found some footing and have been on a good rise in the recent past. Year to date, we see the S&P 500 gaining almost 5%. Even the most speculative part of the markets are doing really good. Take for example the ARK ETF, rising more than 18% just in 2 weeks of the new year. Now, have all the problems of 2022 gone away? I don't think so. But just that the investors are coming out of a pretty brutal year where the S&P 500 was down almost 20% just in 2022 alone. So we're really not sure if the recent bounce in the market is going to last or not. But as good, disciplined dividend investors, we look for cheap valuations. And that is what we're going to discuss in this video today. I'm going to discuss 5 stocks, really good stocks, which I feel are still undervalued even after the recent rise in the markets. Let's check it out. But before that, let's give a quick rundown of the stocks we picked in the month of December, where we had Medtronic PLC, MDT, Target Corp, TGT, Taiwan Semi, TSM, Lowe's Companies, LOW, and finally AO Smith Corporation, AOS. So of these, Target has done the best, notching more than 9% in just last 1 month, and Taiwan Semi almost 8%, AO Smith almost 5% there. Medtronic and Lowe's have been the laggards comparatively. So I have few of these even in my list of January picks. To know what they are, do stay tuned till the end of the video. So without any further delay, let's check out our January 2023 picks. The first one on the list is Lowe's Companies, ticker symbol LOW, which we also had in the month of December. Now, Lowe's, as most of us may know, is a market leader in home improvement and retails in building materials and supplies, lumber, hardware, and appliances throughout stores in the US. In the last 2 weeks itself, that's in 2023, Lowe's has done really well, notching up close to 7%. In the last 1 year, though, it has taken a good little beating, down almost 15.5%. But when you look at the 5 years chart, Lowe's has done remarkably well, notching almost 109%. Lowe's has a market cap of $128.29 billion and currently yields 1.98% at a forward PE of 15.38. From dividends perspective, Lowe's has been raising its dividends for the last 59 years, which makes it a dividend king, which is a really exclusive group of companies who have been raising their dividends for more than 50 years. The 5 year growth rate is amazing, almost 20%. The payout ratio is really low, just under 28%. And we have the ex-dividend date for Lowe's coming really soon on Jan 24th. So whoever owns a stock of Lowe's before this date will be paid $1.05 per share on February 8th. So don't miss out on that if you plan to purchase Lowe's shares. From valuations perspective, as per my calculations, which considers past and recent dividend yields, I find Lowe's to be fairly valued at $251.77. Morningstar has a fair value of $212, while Value Line has a midpoint price target of $255. CFRA has a 12-month price target of $240. Similarly, Zacks has a 12-month price target of $213. Averaging all of these, we get a final average value of $234.35, which makes Lowe's undervalued by 10.46%. The fair value of $234.35. The next on the list is UnitedHealth Group, ticker symbol UNH. UnitedHealth is the largest managed healthcare firm in the US that provides health plans and healthcare delivery to a broad array of customers. Now, UnitedHealth rarely comes into the buy zone, which currently it is in. In the last 1 month, it has lost almost 10% of its value. Year to date, it has fallen almost 6%. So it's a very rare opportunity that someone gets to buy UnitedHealth Group at a cheaper valuation. It has a market cap of $457.43 billion and currently yields 1.35% at a forward PE of 19.62. From a dividends perspective, UnitedHealth has been raising its dividends for the last 13 years at a very good 5 year growth rate of 17.36%. From valuations perspective, as per my calculations, I found the fair value to be $485.26. Morningstar has a fair value of $426. The Value Line has a midpoint price of $666, while CFRA has a 12-month price target of $595. Likewise, Zacks has a 12-month price target of $563. Averaging all these, we get a final average value of $547.05, which makes UnitedHealth undervalued by 11.74%. Third on our list is Taiwan Semiconductor Manufacturing, ticker symbol TSM. Now, Taiwan Semiconductor Company is the world's largest pure play semiconductor foundry by revenue. The last 1 year has not been so kind for this company, down almost 38%. In the last 5 years, a return of more than 101%. Taiwan Semi has a market cap of $427.87 billion and currently yields 2.1% at a forward PE of 15.26. From a dividends perspective, Seeking Alpha shows 0 years of dividend growth. I don't think that's right. There's a 5-year growth rate of almost 10%. From a valuations perspective, I found Taiwan Semi to be valued at $68.21. Morningstar has a fair value of $140. Wildline has a midpoint price of $91. CFR has a 12-month price target of $109, while Zacks has a 12-month price target of $90. Averaging all these values, we get a final value of $99.64, which makes Taiwan Semi undervalued at 14.79%. So even after the recent amazing run-up of more than 17%, just in the last 2 weeks, Taiwan Semi is still undervalued by almost 15%. Fourth on the list is Pfizer Inc., ticker symbol PFE. Pfizer ranks as one of the world's largest pharmaceutical companies, offering a wide range of drugs across a broad therapeutic spectrum. Now, we all know Pfizer as the creator of a life-saving drug that helped us a lot for the COVID-19 pandemic alongside Moderna. Year to date, Pfizer has taken some hammering, down almost 7%. Last 1 year, down almost 14%. It has a market cap of $268.60 billion and currently yields 3.43% at a forward PE of 7.39. From dividends perspective, Pfizer has been raising its dividends for the last 12 years at a 5-year growth rate of 5.7% and a very low payout ratio of 24.39%. From valuations perspective, I found Pfizer to be fairly valued at $45.02. Morningstar has a fair value of $48. Value Line has a midpoint price target of $72. CFRA has a 12-month price target of $62, while Zacks has a 12-month target of $54. Averaging all these values, we get a final average value of $56.20, which makes Pfizer undervalued by 17.46%. The final stock on the list is Medtronic PLC, ticker symbol MDT. It is also featured in our list of dividend stocks for December 2022. Medtronic is a global medical device manufacturer that manufactures and distributes medical equipment to hospitals and clinics worldwide. Over the past year, Medtronic has taken a beating of almost 26%. It has a market cap of $107.20 billion and currently it's 3.38% at a forward PE of 15.28. From dividends perspective, we see Medtronic raising its dividends for the last 9 years. So I don't think that's right because Medtronic is a dividend aristocrat. Its 5-year growth rate of 8.09% at a payout ratio just over 49%. From valuations perspective, I found Medtronic to be fairly valued at $107.69. Morningstar has a fair value of $112. Value Line has a midpoint price target of $106, while CFRA has a 12-month price target of $104. Likewise, Zacks has a 12-month price target of $88. Averaging all these, we get a final average value of $103.54, which makes Medtronic undervalued by 28.47%. So to summarize the stocks that we just discussed, we have Taiwan Semi, TSM, UnitedHealth Group, Vinage, those companies, LOW, Pfizer Inc., PFE, and finally Medtronic PLC, MDT. As you just saw, each of these stocks are undervalued by just over 10% to almost 29%. These are very good stocks to hold in one's portfolio because they are good companies in their own segments and as we just saw, offer a very good value. Hope you like this video and found it valuable. And I'd really appreciate if you could hit that like and subscribe buttons. That would help YouTube spread this video to many more people out there. And until we meet in our next video, let's try to do as much as possible to be financially healthy. And just like our channel name, we make those strides to rise in our life and make our financial lives as much easier as possible. And until we meet in our next video, see you. Bye.